Hi everyone, today I'm going to talk about why AVYA is a very good short squeeze candidate. So this is AVYA Holdings, which is in technology services. And let's firstly do some technical analysis on it. So we see that in generally we're trending down pretty hard. So the long period of trend will be down. And actually medium trend, which takes into account few months, is also down. But for short term, which is couple of days or a couple of weeks, typically, that's the short term, we are trending up. Okay, so we started trending up in August, I would say 19, and we reached all the way to 230, and then we're having actually a little bit of pullback. Okay, so technically speaking, we are in ascending triangle, which is a bullish indicator, bullish pattern. Sorry, this is a bullish pattern, ascending triangle, right? So we expect it to break up. Typically, ascending triangles break up, right? What else can we say? So we had this up running and then we had a pullback, right? So if we take, for example, Fibonacci retracements, which basically measures the retracements, we retraced here on 9th of September to Fibonacci 50 level, which is very, very bullish. And then we started even moving up. And now we're sitting at 38 level. And this is very, very bullish. These levels, if it holds to 50 level and 38 level, this means that it has a good potential to go up. And on the pullback, by the way, the volume here, this is the volume bars, the volume decreased, which is a good sign. We want on the pullback, on the retracement, volume to decrease. Now this is a MACD. MACD crossed zero on 2nd of September, which is very good. And now we are above zero and plus we are above the signal line, which is very, very bullish. And if you don't know MACD, you can Google it, or if you can let me know and I will explain why being above zero and above signal line, which is orange in our case, is very, very bullish. So technicals looking bullish. We're in ascending triangle. It retraced on 50 Fibonacci level and went up, and volume on the pullback decreased, which is very good. So technicals looking good. Now let's actually check the short squeeze parameters. So this is Ortex, which shows short squeeze details. Let's check first of all. So official short interest was reported on 12th of September, and this is the picture which represents by 31 August. So as you know, short interests are reported into 2 times in a month, right? So we basically have a picture of 21st August, and this was reported 2 days ago. And official short interest by exchange is 33.29%. And Ortex estimated that now it's become 24.6%, which is very, very good. So short interest is pretty high. 32% is considered pretty high. Let's actually check how it was increased. I mean, by which percentage it was increased, because by the August 15, we see that it was 19%. So we can actually see this on this chart as well. So this is the short interest, which is reported by exchange. And August 15, we see that it was 19%, right? 90%. And then after 2 weeks, by August 31, sorry, it was 33%. So we potentially have, not potentially, but we have 14% increase in short interest. 14% is the percent of the free float. right? Which is basically 9 million shares in our case. Now you wonder what prices the people shorted this stock. Let's look at the price at August 15. The highest price was, the lowest was 0. Basically 65 cents. The highest was $1.59. So all this extra 14% of free float, which were sold short, was added between 65 cents and here high was $1.59, and currently it's trading above the high, which is 1.67. What does it mean? This means that the added 40% of free float that were sold short, they are all underwater. They are losing money right now. This 14%, maybe even more, we don't know, but this 14%, which is 9 million shares, they are all losing money. They are all underwater, which is very, very bullish, very bullish. Okay, so let's now check cost to borrow. Cost to borrow has increased dramatically since pretty much beginning of the August. It's now at 10%, right? And not only it's increasing, but the speed, it's very stiff increase. So speed is also increasing. Now, this means that the demand for the stock to borrow is very, very high. And that's why utilization is 100% also. So demand for the stock is very high. Cost to borrow is increasing, which means that this is very, very bullish signals because somebody needs those shares to borrow really, really much, right? So from these values, high short interest, 14% is underwater, we know for sure. Cost of borrow is increasing dramatically. Utilization, 100%. This is very, very good for a potential short squeeze. Next thing I want to show is called short exempts. And I'm not sure if you can see this very well, but let me explain. Short exempts. What are short exempts? Short exempts are pretty much the naked shorts that market makers use to suppress the price. So they are selling the shares short. That's the one thing. And the second thing is that when they don't have shares to sell short, they come up with the fake shares, which is sometimes we call it naked shorts or synthetic shorts, right? This table shows basically for this last 1 week what was the short volume and what was the short exempt volume, okay? And what was the ratio between those two. Now, for example, for September 12th, we see that short exempt volume was 280,000 shares, roughly speaking. Short volume was 4.5 million shares, and short exempt ratio, which is just a percentage of short exempt volume divided by short volume multiplied by 100 to get the percentage, is 6%. And on the 9th, it was also 6%, and on the 8th, it was 7%. So, and before that, it was just 1 and 2. So 6% and 7% is considered pretty high short exempt ratio. Now, what does it tell us, typically speaking? When we have a high short exempt ratio, this means that market makers are printing a lot of fake shares, which means that they have a liquidity issue. Now, this is bullish. Why this is bullish? Because they cannot sustain this for a long period of time. It's unsustainable. They cannot just print fake shares for a long period of time, right? This is putting pressure on them. So high short exempt ratio is bullish, and 6% in this case, and typically speaking, and 7% is considered pretty high. So short exempt ratio being high, this is very bullish. Let's check the options. Now options are looking pretty good. We have 67% open interest calls and 32 puts for September 16th, which is this Friday. And we have a very high open interest at $2, 2.5, $3. We have almost 2 million shares if we hit $3. So which means that if we hit those values, market makers have to hedge the options, call options that they sold, meaning that they will have to buy back, not buy back, but buy those options to hedge against the call options that they sold. And we have a very high levels on these prices, which is very good. So options also looking very good, very good. So let's actually take the look at the financials, because I actually don't like the financials. This is the financials. Let's check, let's say income statement. Should we check income? Let's say cash flow. So we see that basically the company is losing money, right? Q3 cash from operating activities minus 85 million. So it's bad that the company is losing money. Let's see balance sheet. Let's actually check how much assets it has. It has 4.3 billion, but it has 5.1 billion in liabilities. So it has more in liabilities than in assets, which is very bad, right? And that's why book value, which is basically total equity, which is negative here, divided by shares outstanding, this is negative, right? Which is not good, not good at all. If we check the cash, how much cash the company has on its hand, we see that it's decreasing quarter after quarter, which shows that they are burning cash a lot. So from financial perspective, company is actually looking not good, to say the least. But this is a short squeeze play. Not for me, at least. This is not a fundamentals play. So we will see if this breaks up from this ascending triangle, and we should see the volume picking up, but it's actually staying on a very good shape right now. Again, the Fibonacci retracement, it retraced to 50 level, which is considered very good, and it went back up, and it's now sitting at 38 level, which is very bullish. So I'm very bullish on this stock. I don't like the financials. I will not buy I would not have bought this for financials, because financials are crap, to be honest. But since we have a very high short interest, 14% of the free float that we are sold short, all these shorts are underwater for sure. We have a very high cost of borrow, 100% utilization. Short exempts are very high, very good. Call options, open interest. So I'm very bullish on the stock. This is for me a short squeeze play, but obviously do your own due diligence and make your own decisions. Thanks for watching. Subscribe to the channel, like, comment. If you want to me to do more analysis, let me know in the comment section, and I'll see you in the next one.